Hey everybody, good morning. Welcome. It is Pete. Welcome to today's episode of Best Stock Picks. It is Thursday, April 20th, 2020. Interesting that the biggest problem that traders are having right now is believing what they're seeing, because every article that you read right now is about what the economy is going to be like, jobless claims, what's going on and the trend with that. But apparently, the country reopening is a big deal. Who knew? Put all the politics aside, keep all that crap out of the equation. We don't want to turn this into a fake news channel or a political one, for that matter. The bottom line is, if you are listening to the videos, if you're paying attention to what's going on in the market, we don't have reason to not believe what we're seeing on the charts. Yesterday, we did discuss that we had heavy selling on Tuesday, intraday, and it was pretty vicious to the downside. And we had the positive news coming out, and I made a comment that it looks like we might be selling the news. Earnings season is taking over right now. Some amazing numbers yesterday from Facebook, Tesla. Now, Facebook, we said during the day yesterday in the chat room, we said Facebook after earnings has a chance to sniff 200, and last I looked, it was all the way up to 212. So we have a big gap opening again today in quite a few stocks. We'll take a quick look at the futures markets and the weekly charts to get a grip on where we are. If you're a Fibonacci retracement guy, Jerry in our chat room yesterday actually noticed that the SPY now has retraced 68% of the move. I had made a comment a few weeks ago that 50% was a level that we expected profit taking to come in, and we did. That was the week that we actually went sideways, and we did see some selling. But the news just keeps getting piled on, and we just are not going down. And here's the thing. At some point, there is going to be selling. At some point, the longer-term economic cycle will end up influencing the stock market. But right now, that's not right now. And that's really the biggest thing that we have to pay attention to as traders. The problem intraday is everybody feels like right now, or even for swing trades, holding swing trades that are exploding to the upside. Take, for example, DuPont, DD, which is, again, one of those many stocks right now that just are well bid and gapping higher, and they keep going, and they're not rolling over yet. You have to trade in the direction that is there, and you can't fear the market turning around, because you're going to end up missing out on some great opportunity. And, for example, we're going to discuss Penn, which we mentioned several times this week, and hopefully you're taking advantage of it. Its price action is definitely alarming in the sense that you should be paying attention to it. It should be on your radar. Volume is in sync with price action, both to the upside and to the downside, and there's opportunity out there. Is the market eventually going to turn? Of course, it's eventually going to turn. At some point, it's going to turn. I do believe that we will reach a point where we start to get to ludicrous levels again, based on the speed with which we're rallying right now. But we're not there. That's the point. We're not there yet. It's going to happen, and there's only two times you're going to be wrong. It's a change of trend to the upside or a change of trend to the downside, but you can't fear that happening. So you have to have a plan in place that if the market is still trading well in a bullish manner, if we're starting to see gaps and staying above, which, by the way, if you're day trading and struggling to get involved after the gap, just think of the gap as one giant green candle, and you got to let it pause a little bit. And we kind of saw that again in the market yesterday, where we gapped up, paused. We're calling it now in the chat room, we're calling it the opening price dance, where it's just dancing up and down, dancing back and forth around the opening price. And then we had the move. So you can't be afraid of what might happen next. You have to plan for what you expect to have happen, but then definitely do what you said you were going to do. And if and when one of these times the market, like on Tuesday, doesn't follow through, be a professional, take your losses and look for another spot. There's no other way to put it, because that fear of what might happen is going to stop you from making money for what is happening. And we got some more opportunity today. We got some good earnings. We got today, we'll review Tesla, Facebook, and Microsoft in a second from yesterday. But today we have Amazon scheduled, Apple, Altria, McDonald's. Gilead is a big one to pay attention to. That, you know, if you take a look at the news the last week, there was the leaked bad news, and then there was good news come out again. Great for day trading. Probably keep you up at night if you're trying to swing trade that stuff. So again, if you're trading pandemic news, you better be on your toes, or you're going to get slapped silly. So anyway, we're going to get into the charts, and again, I can't emphasize this enough. As of right now, we're going up. As of right now, could that change? Absolutely. Will it change? Absolutely. But you can't be afraid of when that's going to happen and miss out on making money now. That's the point I want to get across to everybody. If you enjoy these videos, absolutely, please click down and subscribe. You'll get updates, and especially if you have comments, leave those in the below the video as well, and we'll get to them too. So we're going to head over to the charts. We're going to take a look at some what's going on in the market. So this is what we were talking about. We actually had yesterday going into the market that if we traded back below this prior level, because in this case the SPY was actually inside candle but lower high, if we broke out here, which we did this week, and traded back below this level, we would have ended up looking at what I call a bearish U-turn. But again, if this, then this. We didn't. We actually rallied again. In order for us to get to the point where we are tightening up our trailing stops on longs and even potentially looking at short sales, this has to go well offered. We have to start seeing trading below the open. We have to start seeing lower highs, lower lows as well, because an inside candlestick is not enough to start shorting. It's inside candlestick is indecision. You pull back and you exit winners sooner because the ranges tightened up. Okay, so I can't emphasize that enough. We want to be smart about what we're doing. We're going to take a quick look and see where the futures are right now to get a grip on it. This is actually where we closed yesterday. Actually, it was 5 minutes short. You could actually see a little better. This is actually the close from yesterday, and you can see we've been above yesterday's close. We kind of touched it a couple of times, but did not actually sink. The fact that we rallied and we're coming all the way back down now is going to be interesting. So you got to have that stop loss in place. And I talked about that in today's episode of Stocks for Breakfast. Make sure you watch that video because it's super important to have discipline for if and when a trade moves against you, for if and when the market turns around. You want to be a professional and like that, know exactly what you're going to do before you need to do it. That's what separates a pro from an amateur. An amateur reacts emotionally after the fact and they're like, oh my gosh, I got a losing trade. What do I do now? Panic. And then you go and look at the news and you're like, oh, let me find the reason it's going down. Screw that. You should know what you're going to do before it happens. The reason after the fact does not matter. Read the news after the close. You're trading during the day. And again, don't send me emails saying Pete said don't read the news. I'm talking about as a reason to manage a position. That's what I'm talking about. All right, so we're going to get into, again, I just want to walk through the SPY very quickly. As we said yesterday, it was doing the opening price dance. Do I have a bar? I don't. Let me pull that in there. So for those of you that are in the chat room, you know what I'm talking about. For those of you who aren't, get in there. Get into the 30-day boot camp. We are having a lot of fun. So anyway, this is what was going on. We were dancing around the opening price, below it, above it, below it, above it. And actually, one comment that I want to make, if you happen to be a day trader, had a good call last night, a coaching call with John, and we were discussing the fact that we were, imagining this as a big green candle, and now we're pausing. The trade that in the morning was finally getting above the opening price and closing there, and that trade actually failed. So the question was, did you buy this one, this what we call a swing low here, and look for it to be long again? And the answer was no, because why would you buy where it just failed here? The better trade, for me, for the perfect trade, would be closing above that level that we just couldn't stay above. So I did not look at this one. This is the one to buy. So now we're going to get into some trades. We'll take a look at the stocks. Somebody had asked about Tesla for obvious reasons. So obviously Tesla traded almost inside day, which means we're looking for an expansion in volatility. But obviously earnings and any significant news throws charts out the window. So you can see we're actually up big after hours. So we're going to be flirting with 900 again today in Tesla. So you have to ask yourself, do you want to trade a $70 gap? Here's the game plan for these stocks without getting into too much craziness. The bottom line is you have to, again, visualize that being a giant green candlestick and wait for the pause. Whether that pause is a pullback, That's up to you. I would prefer actually to see it pull back a little bit and then look for a spot to bid. A gap and a pause will decrease the amount of profit potential. You're seeing a lot of these stocks are coming up to resistance, but a gap and a pullback that expands the profit potential at least back to the high of what today would be. So same thing in Facebook, up $17 right now, which takes it up into this 212 area. So you got some resistance there as well. So on these stocks that moved and are gapping on earnings, which is very exciting for the market, obviously, looking for the pause before you get involved. Now, if it just explodes again after the gap today, which I don't expect, I expect a little bit of consolidation. If it explodes again and you decide to trade as soon as it breaks out of that opening range or out of the gate right away, it's imperative that you are disciplined with decision-making in case that stuff pulls back, okay? So I want to talk about something that's kind of funny yesterday. If you happen to catch the post that I made yesterday, when I was doing my scans yesterday, these actually popped up, and I was taking it as a subliminal message from the market for me to get in there and eat cake. But ironically, they came up in the scan as trading opportunities. So we did talk about them briefly in the room yesterday. And if you take a look at both of those stocks, all jokes aside, here was EAT and the point that I want to make here, which again, we touched on the brick and mortar retail guys. Look at this volume yesterday, and cake was the other one. Same thing, you can see increased volume. This is really where you're learning to read the tape and you start to combine price action with volume. The other one I want to talk about was requested because we actually had a buy trigger, excuse me, a couple of days ago in Sketcher at 28. Buy trigger triggered on Tuesday and had a beautiful gap yesterday's follow through, and 34 is the level. So the question is, what would you do now? Well, the stop loss is a close back below 28. I don't know if you necessarily want to risk $2 on a trade like this, especially after it punched through there and has 2 days running. Maybe you do, maybe you don't. If you're a day trader and you can initiate another trade where you can manage risk a little bit tighter, you don't have to risk that $2 looking for 34. That actually makes sense as well. But looking for a follow through again today, which again is going to decrease your profit potential on a new swing trade long. But for those of you that emailed me and took advantage of the 28 trigger and you set the alert, awesome job. Really, really awesome job. The other one that I want to point out, which I mentioned at the beginning of the video, was Penn. And again, I want to really start training everybody to watch. First look at the charts and then look at interesting price action. Look at the up days and the expansion in volume and the down day decrease in volume. That's good to see. So Penn was one that we called out to keep an eye on. And the gaming in general, we're watching Win as well. Let me move that volume off of there to make the chart a little bit cleaner. And you can see now Win is actually well bid 1, 2, 3 days in a row, and it still has some room to go. Let's see, some MPC, very nice explosion there yesterday as well. COP, which was also mentioned in yesterday's video as well. VLO is interesting. It's a stock that I used to day trade quite a bit. The trading range has contracted a bit, so now it's more of a swing trading stock. But again, if you remember what we talked about yesterday, a push and a pause, a push and a pause, a push and a bigger push, probably looking for a pause right now, maybe get one more day and then a pause. So day trading stock looking for a higher opening, a pause, and then a push. TTD has been in the list recently as well. Now, it's increasing with volume, it's increasing with green candlesticks, but again, very similar to a lot of stocks we're looking at, it is not a trade going into today. Today, it is a trade that needs to prove it can get above this level and stay there, or whatever the perfect level is. So for me right now, that perfect level, very similar to what we looked at in Sketchers before, SKX. It needs to get above 44, close above 44, and then look at that one. Hopefully you guys took advantage of this one we discussed yesterday as well. ENPH on a buy stop above that level, really solid green candle. Another one that we mentioned that wasn't quite ready to go, but did have great follow through was HOG to initiate a little bit longer term swing trade. So again, we're getting the push. We want to see the pause so we can manage some risk. Keep that in your trading tracking journal. Two stocks that just seem to refuse to go down that are pausing very nicely, W and BIG. Very good candlesticks there. W is actually giving you a pause for another move higher. Look, I never want to say, as we say every day, it's never too high, right? But a 500% move at some point has to consolidate. You would think that the online retailers are going to pull back a little bit just because the world seems to be opening up a little bit. Next, American Express, another one where we need to watch it to get past that level. So we're looking for a level above 96. It keeps getting up to this 96. So personally, I'd wait for it to get above par, which is 100. I don't want to trade it into that level where there's usually resistance. So pause around 100 be where I'm looking at. Also, stocks that we mentioned yesterday, and there's a theme here, home builders, Lennar, Toll Brothers, KBH. My typing skills aren't the greatest today. KBH and Pulte. All of them have had good 4-day runs. Maybe we'll get another day or two. A little bit late from a swing trading perspective. Again, I'd be looking for the push and the pause. Some of these have room to go. And again, obviously, if we start getting outside again, some of these stocks, a little bit longer term position trade thinking. A couple of other stocks to keep an eye on today are PayPal, which you can see is at or near that resistance level we've been talking about, which now this is the level we said that we need to see get through and stay there. Let's pull this out a little bit so you can see where this line came from. So it needs to stay above here. Now, because the last 3 times it got up to this level and failed, I'm not trading on a buy stop at this level. I want to see it pause above 120 before I get involved and then look for the next swing. So again, this is longer term chart reading where it keeps getting up there and boom, boom, gets slapped back in the other direction. So I want to see it pause up there and obviously look at PayPal. We're going to look at Square. Square actually finally did punch through that level. I'm looking at it as a buy stop above yesterday. I don't want to see it pull back for an entry. In this case, buy stop, pause, and then look for an entry. Here's the thing, though. Place a limit order, because if this thing gaps up and you're missing $1.40, that's going to end up being your stop loss of this trade. So be smart with, you want to get a certain price or better. Don't be chasing it because it's already up a decent amount over the last week, 55 to 65. So $10 over the last 5 days. Stock needs to consolidate a little bit. And again, if you're not familiar with how we really set targets, is we look to the left and say, what does it normally do? So in this case here, 42.50 to 62.50. So you know what? Maybe it does have some more room to go, looking at that a little bit deeper. All right, so it's got another $10. So you got to really analyze where the level is there for you. So anyway, those are the trades we're looking at today. Obviously, as we said, Amazon and Apple, the two big guys looking to report today. Very important. Do you trade earnings or do you not trade earnings? I can't tell you. I can tell you this. Earnings stocks usually a lot more volatile heading into earnings like we had yesterday with the FOMC announcement, just to give you a little food for thought. I don't trade FOMC announcements in the afternoon. Over the years, I've just found them to be a complete guess. I love trading the next day after FOMC. I love trading the next day after earnings. So today I'll be a little bit more focused on Tesla, Facebook, and Microsoft and that immediate price action. But I won't be trading these stocks heading into earnings today. Again, that's my personal trading plan, some stuff for you guys to consider. I like to be in control, and I always feel like after the news is a lot easier to see the price action, read the tape, and then trade. Might not be perfect for you, but it works for me, right? So plenty of stuff to look at again today. Again, trade what is happening. Don't be afraid of if the market turns around, because if it does, you should be prepared. If you're not prepared, don't trade. It's really that simple. So anyway, if today is the day that we get a little bit of profit taking, the futures actually just pulled all the way back to yesterday's close, which is pretty interesting, despite the fact that we were up much higher. So some of these gaps are going to push and push high. Again, imagine it as a pause, and whatever that pause is, manage your risk within that pause. If we start to pull back hard and we do see some profit taking, you have to go into the day saying, am I going to short sell any of these stocks that might see profit taking? You need to make that decision before the market's open. Thanks for watching the Best Stock Picks today. It is Thursday, April 30th, 2020. I'm Pete Renzulli. Have an awesome day and be safe.